when demand is more, what happens is the share value becomes more. Is well regulated and its dealings are well defined. That means everything is transparent. Whenever they go with this, what happens is every time there is a new buyer who will actually buy the shares. Provision of law for speculative activities in the restricted and controlled manner. Hello everybody, a warm welcome to one and all. I'm Abhilash from the Department of Business Studies in Vidhyaashram PU College, the Temple of Excellence. Welcome to the next session of financial markets. In the previous one, we went with money market as well as primary market. Now it's a time for us to know more about the secondary market. So what exactly this secondary market is? Try to understand this. Secondary market is also known as the stock market. What is it? It is also called as stock market or stock exchange. Here what really happens is the word itself says exchange. Now the securities will be exchanged by one person to another person. So here what happens is the primary market is all about fresh shares, fresh securities. Let's go with this, securities. Right now, when it comes to the securities, now a person whoever have purchased a security, now he should actually sell it, or somebody need to buy it if they have not purchased in the primary market. Where will they go? They need to go to the secondary market, where these shares are being bought and sold. So it is a market for purchase and sale of existing securities. So which are they? They are the fresh shares. Whoever you have taken it, they need to sell the shares in the secondary market. It helps the existing investor to disinvest. Now person who has taken the fresh shares can actually sell his shares in the secondary market. That is called as what? It helps existing investor to disinvest and fresh investor to enter the market. Whoever have not purchased in the primary market, they have an option in the secondary market. That is what it is. See, stock exchange all happens. We have two major stock exchanges, that is National Stock Exchange, and then we have that is the NSE and BSE called Bombay Stock Exchange. So these two exchanges are the real big exchanges in India. That is the stock exchange in India. We go with the NSE, that is National Stock Exchange, and then BSE, and that is called Bombay Stock Exchange. So here NSE, what really happens, I'll tell more about NSE and BSE. NSE has something called Nifty, right? Nifty, and BSE have a sensitive index that is called as Sensex, and Nifty is the index of NSE. It also provides liquidity. See, this is the one big point which you people need to know, that is it also provides liquidity. When I say liquidity, you can actually convert those securities into money, and marketability to existing securities. So here you will also need to know that there's something called stock exchange. Now what exactly a stock exchange is? Stock exchange is an institution. And what exactly this institution does is, here buying and selling happens. Selling and buying of what? Of securities. Will take place. That is the existing securities. What is it? Existing securities will be purchased here. So a stock exchange is an institution which provide a platform for buying and selling of existing securities. So whoever have actually purchased it, they'll actually go with it. As a market, the stock exchange facilitates the exchange of a security, that is share, debenture and etc. into money and vice versa. That means they can convert money into exchange as well as exchange into money. That is what they'll actually go with it. So stock exchange is what? buying and selling of shares, that two existing shares will happen in that particular place, and it is an institution. So what is the meaning of stock exchange? According to Securities Contracts Regulation Act 1956, please remember there are two acts which is very famous. One is the Companies Act. The Companies Act 2013. Then you already know that there was one more act called the Companies Act 1956, but now it is revised. The same way you have a security contract, that is Securities Contracts Act 1956. What they say is, stock exchange means anybody of individuals, whether incorporated or not, constituted for the purpose of assisting, regulating or controlling the business of buying and selling or dealing in securities. So we only go with those, any kind of a people who goes with it, that is they exchange the securities, we call that as the stock exchange. Now we have the functions of stock exchange. What are the various functions of stock exchange? I have given you six different points of stock exchange, that is the function. One is providing liquidity and marketability to the existing security. Then you have is pricing of securities. Then you have safety of transactions, contributes to economic growth. Definitely stock exchange will contribute to the economical growth. Spreading of equity cult. Now here you need to understand what exactly the equity cult is. In this session I'll tell you what exactly the equity cult is all about. And then the lastly you have is providing scope for speculation. Now what is speculation also you need to understand. These are the words which you are supposed to get familiar with. So firstly you have is providing liquidity. Understand what is it? Providing liquidity and marketability. When I told you about the stock exchange, I told you about it is a place where you will actually get a chance for liquidating as well as marketability to the existing securities. That means you can convert it into money and vice versa. Pricing of securities. Now you will get to know what are the prices of different securities. Safety of transactions. See, this is the main point here. You need to understand that there should be a safety of transactions. So I'll tell you, the first one here is providing liquidity and marketability. The basic function of a stock exchange is to the creation of continuous market where securities are bought and sold. That means it is always what is continuous. And let me tell you, when we go with it, from you have Monday to Friday, the stock exchange operates. So there are 2 days where stock exchange will not operate, that is Saturday and Sunday. Apart from that, Saturday and Sunday. Apart from that, any government holidays given, right, that to the stock exchange which goes like October 2nd you have, right, those days are the days where the stock exchange is not working. But apart from that, from Monday to Friday, it is all what continuously it goes, and you can actually convert it into cash. And pricing of securities. Share prices on a stock exchange are determined by the forces of demand and supply. When demand is more, what happens is the share value becomes more. The share value also becomes more when you have more demand, right? When you have less demand, what happens is the share value will come down. That is what happens here. Next, a stock exchange is a mechanism of constant valuation. What is it? Constantly, every second, even I'll tell you, every second the price will change. That is what it is called as mechanism of constant valuation, through which the prices of securities are determined. So here what happens is it's all depends on two things. One is the demand and supply. So here every second they'll have a demand, they'll have more supply. So here what exactly happens is The demand is more, the share value will increase. If the demand is less, the share value decreases. If the market gets a negative information, right, though the company is doing really good, because of more negative information, also what happens, there is a speculation. I'll tell you about the speculation in the in the next slides, that what exactly the speculations are. Safety of transaction. Here, whenever you go with any of the transaction, firstly you need to know that whether it is safe or it is not safe. So here, when we go with it, you will understand that yes, there is safety which has been taken, and they have taken care about it. So the membership of a stock exchange is well regulated, and its dealing are well defined according to the existing legal framework. And this ensures that the investing public gets a safe and fair deal on the market. So here, the membership of the stock exchange, whenever we enroll to the stock exchange, what the stock exchange does is well regulated, and its dealings are well defined. That means everything is transparent here. Contributes to economic growth. How will it contribute to the economic growth? Try to understand. Your GDP, gross domestic product, everything valued, or whatever the kinds of things are there, yes, definitely there is a bigger role of the stock exchange as well. So a stock exchange is a market in which existing securities are resold and traded. Through this process of disinvestment and reinvestment, see here, disinvestment and reinvestment, savings get channelized into their most productive investment avenues. So here what happens is, you are actually using a source where you are actually mobilizing money. So when any kind of a thing, see, banks, what they do is, your savings, you go and give it to the bank will make very useful of the savings, and it will give. So what happens is, the money is being mobilized. Same way here also, stock exchange, whoever are the saviors, they will actually save, and then they'll invest in the entrepreneurs or the enterprises. Here what happens is, again, it is all what, your money is being circulated, and it is channelized into their most productive investment avenues. Then you have spreading of equity cult. The stock exchange can play a vital role in ensuring wider share ownership by regulating new issues. Whenever they go with this, what happens is, every time there is a new buyer who will actually buy the shares. Better trading practice, and taking effective steps in educating the public about investment. So why one should actually invest? I always tell this to all the students here. Say example, 1 lakh rupees you have in your pocket, jeans pocket, you have 1 lakh rupees, right? After 10 days, if you check your jeans pocket, again that 1 lakh rupees is still there. You wait and watch for one entire year, don't do anything. After 1 year, you go back to your jeans pan and then check it, again you will have that 1 lakh rupees. But if you start investing in a right share, after 1 year, probably that 1 lakh will give you 80,000 rupees extra. So that is what the equity cult is all about. Now, best example, I'll just tell you, a friend of mine, he purchased 2,000 shares of a company. I don't want to tell you about the company. The company was really not doing well. He learned about the information about the company, who are the CEO, CFO, what really happened, why there was a downfall of the company shares. Now, will it come or back or not? He invested in that company. 2,000 shares he purchased it, and later, after 1.5 years, right, he sold those 2,000 shares. What did he do? Simple logic. When the demand was less for the company, what really happens is, the price value will come down. When the price value will come down, that is the right time to buy the share if the company will bounce back. You need to understand that. Don't buy any company share because the demand is less, right? Now you need to check that whether the demand is created or it will not be created. When he took those shares, I'll tell you, one share of that company was 140 rupees. How much? 140 rupees. So he purchased 2,000 shares of each 140 rupees. Now 2,000 into 140 is what it is. Now the stock exchange will give you something called the options. It will actually give you the limitations, how much you can actually take, what is the benefit of taking it. We call that as the exposures. Now the stock exchange had given him the exposures. Now he has purchased 2000 shares of 140 rupees each. After 1.5 years, that one share was 413 rupees. Now just go with this. For one share, it was 140 rupees, right? After 1.5 years, the same one share, it became 413 rupees. Now just go with a difference amount here, right? 413 and 143, it is like 3 here, it is 11. So 4 and 11, if you start counting, it is like 73. And here it is how much? Here it is 273. That means 273 rupees he earned for one share. What about 2000 shares? So try to understand, try to analyze this, right? This is what happens if you start investing, right? And you should get that, the public about the investment. Now 273 rupees he earned from one share into 2000 rupees. So how much money he made? Try to analyze this. This is what they actually go with, right? And I'll tell you, it is not like every company, whoever will actually have a downfall, they'll come back. It's not like that. I'll give you one more example of a live examples, which I'll give you here. In the month of say March, right? Infosys shares, right? Let's go with this. Infosys, we call that as Infosys shares, was somewhere around 500 to 550, right? In the month of March, right? March 2020. Let's go with this. March 2020. Infosys share, one share was under 500 to 550. It came down because of the pandemic and all. Now in the same, say November to December, let's go with it, 2020, I'll just write it. Now the Infosys shares, they play with 1100 to 1150. Now in the span of what? March, right? April, May, June, July, August, September, October, November, say 8 months, right? In the 8-month span, 500 or 550 to 1100 people who have purchased, say 1 lakh shares of Infosys, right? 1 lakh shares of Infosys, it's like double the amount. So what it does? Investment. You need to actually check that, and then you are supposed to go. This is the equity cult. Next, you have something called providing scope for speculation. Here what happens is the stock exchange provide sufficient scope within the provisions of law for speculative activity in a restricted and controlled manner. Now speculation here means what? It will go up, it will go down, it will go up, it will go down. There is a volatility in the market. The market is not stable. So it is a speculation, but still what it is? Provision of law for speculative activities in the restricted and controlled manner. The next one is, it is generally accepted that a certain degree of healthy speculation is necessary to ensure liquidity and price continuity in the stock market. Yes, sometimes the demand and supply, whatever happens here is, it all depends on how many shares the people are actually buying it. So the speculation will be there, but the speculation is also what? It is a restricted and controlled manner. And here what happens is, it is generally accepted that a certain degree of healthy speculation is necessary to ensure liquidity and price continuity in the stock market. So these are the things which you are supposed to know, the functions of stock market. I have explained you the meaning of stock exchange. If you have any doubts, students, you need to call us. We are always there to help you. I'll see you when I see you.